Good afternoon, Scott Riley, T3 Live. Welcome to today's recap. So today was Thursday. What, 4 days left. Now we have 3 days left. Powerful day. Another up day since the Fed came out with their decision to start tapering. And a lot of people are saying, how did this happen? Where did this new strength come from? Why hasn't the market pulled back? The same type of questions people have been saying, pretty much all year long. And then you hear everyone talk about, oh, next year we're going to have the 10% pullback. We're going to have the 20% pullback. Anyway, with that being said, you could always judge these things along the way. And that's what we've been trying to do all year long. Judge these things along the way based on your time frame, based on your disciplines. Now, coming into Fed Day, no one knew what would take place. Were they going to taper? Were they going to have a September surprise? How is the market going to react? But technically, the market told you, you know what? Equity risk back on. You look at the chart here of the SPX and you will see what took place. First of all, this is the trend that's been intact for the majority of 2013. 3 different times you saw topping type patterns that could have led to a correction, but didn't. Here was your outside day here, led to pretty much 4 or 5%. Here was that short-term head and shoulders top, didn't even lead to that much. Here was that false breakout, led to the trend line, and then this is what's transpired since. So in technical analysis land, you look for power, you look for control, and who has it? All right, we came into the Fed pulling back. We were down only a few percentage points off the highs, took out this prior low, hit the 50-day, blast off. Every single person out there tried to make opinions on what the Fed was going to do, how the market was going to react. This told you that we are now in the game for Santa Claus to come on that sleigh once again. And again, if you didn't like doing it on this day, here was your digestion day showing commitment before breaking out again to all-time highs. And now here we are, 1842. I believe somewhere around here, I was talking to Patty Dom, and we talked about 1840 to 1860 for year end, and we're in that target area now. Question is what to do the next 3 sessions. This kind of grindiness can continue. Why not? Are we overbought? Yes. Are we seeing sector rotation and all the things that we've seen throughout the course of this year? Yeah. So that's why you can't just be blindly short. Can you make some money short some things? Yes. But the real money, if you come back to me, has been on the long side, buying pullbacks, holding multiple positions. And recently, the market's just been taking its turns, or taking its turn where it wants to go. And if you look at people like, oh, Red Dog, look at your Bank of America, it's not doing anything. Okay, put it in perspective. This was the last move that Bank of America had. Could you imagine what the market would have done today if the banks participated? All in all, nice move, holding steady here, being whatever you feel comfortable, and then when this, or if this gets above 1587, it probably goes again. I'm not going to get into the rest of the banks. Same thing goes there. As far as high beta tech, Amazon, really nice upper level flag. Guys are talking about it. Kind of continue? Yes. So you look at the pattern. It's been holding above the 8-day. Kind of held it this time. 396 was that level for short-term guys, and now above this, 400 and 472. It could go again, but just always be aware that these base-on-base type of moves are always prone to a little bit more risk. So just make sure if you're playing it up here, play with a little less, and just know if you're playing it for a breakout, be long only if it holds above that breakout price. With that being said, some guys were targeting Google at 1,015. If that was you, you had another small little trade. This has been the trend since earnings. Really nice gap. This was an add right here. Another nice add as it broke out above this level. Then it's giving you a few different prices to get in. Here was another one. And then today it poked its head above this recent range and giving you no reason to abandon ship here. No technical signal that it's weakening. It's still just grinding higher. Netflix I'm not even going to talk about. Someone asked me what to do with Tesla. Tesla's kind of a little weird. You look at the chart, you look at the way it acted, it's changed its character a few different times this year. This was the pent-up move all the way into this area when it held the 21-day and it was really fast, furious to the upside. This is when it diverged. Here was earnings. Then you had this lower level, small reversal right here, the big gap up. And at this point, it's pretty choppy. If you've been holding it ever since this little wide range bar here, or maybe at this red dog reversal there or here, it's really been not the Tesla of old where it goes up, goes up midday, then closes on the highs. The last 2 days you almost had to be long overnight in order to make money. And if you went long intraday versus the highs, you're probably not too happy with it. So with that being said, It's come back into some resistance, and that's why I think it's having some problems here. I'm not long. I haven't really been trading it since this area. I liked it technically set up here on this red dog reversal. I also liked it on this breakout into here. So it just goes to show you, I just pick and choose my spots, when I want to be involved in swing trades or day trades. And at this point, it's really not interesting me that much because it's a little random for my taste. With that said, Twitter, listen guys, let's put it up here. First, before we talk about Twitter, let's just talk about what a pain trade is. A pain trade is a trade when people think something can't happen any longer. Almost like when you're in a casino, you see a lot of people around the roulette table. You're like, oh my goodness, why are so many people around a roulette table? Because there are 12 reds that have gone off. So 12 reds, now everyone think a black has to happen. Some people came to the table when there were 6 reds. Some came maybe when there were 9 reds. Some walked over at 11 reds and said, I'm going to take everyone's pain that's been sitting there since 6, 7, and the piles are mounting, the stress is going nuts. People are running in between rolls back to the ATM machine or getting the casino boss to give them more credit because they think the next one has to be, the black. But sometimes it goes from 12 reds to a 13 red, a 14 red, and those people that started at 8 or 9 that didn't have a plan, which is a little bit different, they get stopped out, they lose their limit, they have to leave the casino, and then finally, the trend changes when something different happens, or double green happens and they screw everybody. But that's I don't like to make analogies to casinos because I actually hate gambling because I'd rather be in the market where there's heavy probabilities where you can pick and choose your hands and whatever. So with that being said, a lot of people you heard all day long, what's going on with Twitter? Why is Twitter up? How could this continue? Blah, 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 blah. P.S. You look at the chart, and yes, is it extended? Was it a nice trade here at 42? Yes. Or another additional entry maybe here, or maybe when it took out the IPO highs. Then you had this extended move. I remember this one. I actually made a little bit of money cute on the short here with this red dog reversal. Then we actually flipped and bought it. I was long, I think, here, held it through this day, sold it on this day. But the reason why people get into a pain trade is because they miss this move to the long side, so they think it owes them short. Maybe they're like me, they bought it here and sold it early and think that because they sold it early, they can make it on the other side. Or they think people have been short from here or from here and they're going to take their pain and it has to go down at some point. And a lot of people are caught. And the stock is doing something that usually stocks don't do. So that's why it creates that pain trade. So with that being said, you could almost go to basic studies and look at the volume today. Massive volume. Stock still closed pretty well, and there's no true signal yet that this is going to stop. This gave you a red dog reversal, giving you some signs that maybe it could relax, and it did. Today it looked like it might have. I actually traded this intraday a few times, starting off the open, and it did go from up to $3 to negative, and there was intraday money to be made short. But the problem is, if you've been shorting this for 3 days and you make good money in that first hour, you think that trade owes you, that you can't leave it because now this is the day, and then you add there, and then if it's not that day, you give back what you would have liked to have made on a normal day when it wasn't such a pain trade, and then you can wind up losing what you've lost the last 3 days, and now you have to enter the same day tomorrow thinking, I got to make some money back. But meanwhile, you don't realize that you could be making money elsewhere, and it's taking up all your time, and you're stressed out of your kazoots through Christmas week or even New Year's. So if you go to the 5-minute chart of this, you will see, people like Red Dog, why did you cover? What did you see? Da-da-da-da-da. So here was that gap up. Okay, I did get short, a little bit early into this. This is when it broke the range, so I was like, okay, maybe we fill the gap. Filled the gap, traded below, okay, what went on all afternoon, while the market was closed, and then gave you a quick little push down. That was trade number 1, right? Anyone would have been happy with a trade like this from 73 all the way down to almost 69.5, right? 3 points or so pretty quickly. But because this has come so far, no, it has to be a bigger move. And it could have been. It could have been a bigger move because if you go over here just to teach you guys a little bit, okay, this right here looked sort of exciting, right? This was your quick move lower. So it already traded above, below the prior day high, which could be a red dog reversal. Okay, and then you had a potential bear flag. So if this was that weak, okay, and this built, this should not have been taken out. So in my mind, just to teach you a little bit, so if I made money short here and added and then covered a little bit and I had a little bit left on, I would have said, okay, the longer we stay down here below 71 and build this bearish flag and the buyers can't step back in, maybe there's a chance we take out this, this low and go further down, go maybe to this prior area and get more downside. So in order for this to be that weak, it shouldn't take back this 71. The sellers should be able to control it. So what happened though is this, and then that. So for me, on this bar, that told me that, this stock isn't that weak. This was a nice trade. Let's revisit again perhaps later. So that's when I pretty much covered. And then some people actually went long on that move. I think that's when I went long a little Facebook, and Facebook went green. But anyway, if this was going to stay that weak and continue to the downside, it should have stayed below this area, not be able to take it back and squeeze everybody. So with that being said, then look what happened. Wouldn't you have liked to have covered here versus being squeezed up all the way through the morning high? Because that's when everyone says, oh my goodness, this thing can go, can go anywhere. Once it takes out the morning high and there's nothing to the left besides that. So anyway, P.S., this is a little trading 101. And then later in the day even, there was a chance that it could roll over. Okay, I came back from the gym and this was what I saw right around here. Okay, this was the sideways action. Kind of had a wide range bar below it, started to roll, got a little short there. And then I added a little bit here, somewhere around there, and covered some, and then I stayed short a little bit. And I said, you know what, if the sellers want to remain in control, same way here, okay, where it should not take back really this area. It should be able to give you that move down and then not really bounce. Okay, this was one bar, came back down. This is actually a little red dog reversal on the 5-minute. Came up, and then this was how I got squeezed. I got squeezed out right around there. Tried it a few different times, and now it's right back in there. And as you look in the daily chart, it's not giving you that clear signal. It's telling you that buyers still can't control this. Do you chase this to the long side now because of that happened? Probably not, because at any time it could get some pressure, and you never chase on the long side a parabolic move. But the same way you don't chase it to the long side, you don't blindly short it thinking it has to go lower, because it doesn't. So with that being said, and I've seen this many different times. We saw this in silver like 2 years ago. We saw it in, remember LVS, that one move to 55. If you trade in the community, went from 40 to 55 in like 4 sessions, and we traded it from the long side and then got caught there. I've been trading for a long time, and I've seen this type of thing happen, and really good traders actually do get caught taking the other side of the trade. And these are good guys that make a lot of money, and then there are guys that try and be disciplined who look for the opportunity, because again, today it could have failed and it could have been a nice cash flow Q trade, but it wasn't. And chances are, even if you get that side of it, the better trade will be buying it like we tried to buy into the 8-day moving average for higher prices, because the stock is showing leadership type of credentials and blah, blah, blah. The bottom line is, pain trades are painful for a reason, because a lot of people are going against something that shouldn't happen, but nobody's in control. So if you're going to be in that trade, do it a level versus a level, or don't do it at all and wait. And at this point, hopefully if you don't have too much sunk into it, you haven't lost too much where you feel like you have to go back to it every day, because that's what it turns into. So at this point, you know what today's high is. We'll see how it opens tomorrow. I'm sure, if it opens up tomorrow, I'll probably try and be cute a little bit from the short side again, but I'm going to take my trades, and I'm not going to let a cute short turn into an ugly day, which it's been doing for a few of you guys out there. So anyway, with that being said, Apple also is just taking its time here. You had the big gap up after China Mobile, closed near the lows. Some people think because they want to nail the 560 strike. At this point, I'm still in it. I'm light. Can it come into this gap and still be good? Yeah. So if you trade it and you don't want to take the risk, if it were to break below 562.76 and you want to get out of some, I guess, get out of some. If it were to come below it and then come back above it and put a nice little tail there, that would be your way to know that it could be back on. Or you could just wait till above 570. But we know with Apple, sometimes you come out with news. And if you're not in it, you could be upset. If last Friday we took some home long and we got kind of lucky. If you've tried to buy it since that, it's been frustrating. So I would say stay with small if you can handle the risk, and then at some point we'll get some kind of reversal, maybe into the 8-day, and then we'll be able to hopefully add through this trend line. Kind of like what happened with Amazon. Amazon looked like it was coming in and at this flag, but granted there's no, gap there, but then all of a sudden, now it looks good. It came right into the area, held the 8-day, closed strong. So now it looks like if you bought the dip cool, now it's in the game for momentum above this if it wants to have it. So with that being said, with Apple, I still think that next year could be a real good year for it. I'm still thinking 640 plus. But at this point, going to the end of the year, with option expiration tomorrow, you just have to know what your discipline is, how much you want to hold, and what it is that you're looking to get out of it. And lots of nice movement. Let's see, some people were talking about CVX today. You look at Chevron, nice move, breaking above a trend line here. I think we were looking at it even way back here in this engulfing bar because of the strength in Exxon, and now it's poking its head out, could continue higher. Exxon itself, you take a look at it, XOM, really nice move. This too, if you want to take a look, this is a nice wide range bar, 3-4 down days in a row into the 8-day moving average, just to show you about concepts. Held the 8-day, turned up. This could have been your clue to get into more, and then now it broke out, so you had your day-and-a-half trade. LVS, I sold it today. It was just a nice day-and-a-half strategy, strong stock, turned green, traded through here, took the day-and-a-half trade, pulled back to the 8-day after a nice consolidation, and it continued. So it all depends what you're looking to do here. If you're looking to just be a swing trader in the strongest stocks, still, I do say you should trim and trail into crazy strength, especially if it's on day 4, day 5 of a move. But there's no reason to run for the hills if you think you're going to stay in some of these things that you like for the next year to come. And if you're day trading, there's some situations out there that keep presenting themselves. And if you're looking to be like actively swinging, kind of like what I'm doing, I came in today I think with 8 longs, 1 short, and I leave with only 5 longs because we're up now 6 days and I'm going to figure it out. Plus this is my last day trading from the New York City office because tomorrow I'll be in Short Hills and then I'm going to be away heading into the New Year's. So I'm going to keep my risk down. I'm going to try and see if the banks hold in there, see if we can get another trade in Apple, and then see if there's anything that really presents itself. But for right now, it's been a heck of a year. The indices have done unbelievable. There's been stocks to own, stocks to pick, stocks to trade, and hopefully you've done a few of those things to put a smile on your face as you head into the new year. And if you didn't do that and you've had opinions and you're frustrated, you got to make some changes because you don't want to be doing the same things you did or making the same mistakes you made for 2014. If you go to the website, you will see on the site we have this 8-video segmentation of an interview that John, editor-in-chief, did with me. You'll see that there's 8 different videos just talking about style, talking about tactics, talking about what I do, how I do it. If you really want to maybe get in my head a little bit, watch those videos. I try and put together some common sense with some technicals, with some feel, with some routine, and that's what pretty much makes me successful because, in the book, The Modern Trader, I'm the workhorse. I'm not a guru, I'm not the natural, I'm not any of those things. I'm the one in at 6:30, up at 4:45, and I put my routine together, I try and follow it, I try and work on it, and these are all things that you could do as well, but you got to start. So with that being said, it was a good interview, and if you want to take the time, if you have some time between now and over the weekend, I would watch those 8 segments, and I would also spend a little bit of money and look for the 2014 thesis. If you look at the 2013, you'll see the 6-7 stocks I focused on. You decide for yourself how they did. 2012 also did a few of the same things. So there's bound to be some nice things in the thesis that'll put you on the right track that will more than, in my opinion, pay for itself in how many fold. And then also it'll also give you some insight into what I'm thinking. So when 2014 progresses, you'll be able to really follow along when I'm like, okay, this is happening now, let's do that, or that's happening now, let's do this. And the best way you can make more money is having conviction in what you're doing and understanding a methodology. And within the big 2014 thesis, you'll really get a grasp of my methodology on time frame analysis, technicals, common sense, relative strength, weakness, what to look for, how to navigate, how to use a tier system, all the things that I do that try and keep me successful and keep me consistently moving forward. So with that being said, have a great weekend, have a happy and healthy New Year's. I will be checking in, so you'll hear from me, but you're not going to see my face on this video. I will be done from here into next year. It's been a great year. Thanks for everything. Thanks for all your contributions. Thanks for all your positive vibes. And let's all continue to just make headway and big headway, and just be in a position to navigate again for next year and keep navigating, because this market's going to be here far after we are, and you just have to keep making changes and grow with it. Scott Riley, T3 Live, the recap. Have a great night.